Hey, what's up, everybody? Joe here for Dead Cat Crypto. Thanks so much for joining another Wednesday on the live stream. We're talking about the Genius Act, the stablecoin bill that was recently passed by the Senate, giving some clarifications, much needed clarifications for DeFi and crypto in general. It's your first time coming by the channel, subscribe, support, comment, share, of course. Happy to have you. Happy to have any returning viewers. We'll get this started momentarily as I organize all my screens here. Just switch to the dual monitor, and it's a little overwhelming here. But the news is all about stable coins, and I think you'll find it hard to argue that so far the number one use case of crypto is stable coins, right? You got gambling, which is like meme tokens, perps, NFTs, and then you've got stable coins. And this bill addresses stable coins specifically, and I expect we'll see loads of stable coins, coming from the likes of, Amazon, Walmart, Shopify, accepting multiple stable coins, kind of the same way we're all using various credit cards, various debit cards, and different mobile payment type apps. I think we'll all be using stable coins at a certain point and maybe not even know it, right? Maybe not even know it. Just have it better on the back end for the banks and the institutions to handle settlement and all that. So again, welcome. We're talking Genius Act. I'm Joe, your host, and I see some people are on X, some people are on the YouTube. It's easier to come over to the YouTube to comment. I see those comments. I don't believe I see the Twitter comments the way my software works. So, man, let's start with the main framework, right? The Genius Act is meant to be a framework, a starting point for US government's regulation of crypto. Makes sense to start with stable coins. Like I already said, we're talking the number one use case so far. When I first got into crypto, I don't think there were stable coins. I remember trading volatile assets and then swapping them into other volatile assets. This was like maybe 2016, 2017, and there was like nowhere to park your profits, if I remember correctly. It was just loads of tokens. It was like, you know, it was more wild than the Wild West that is, Pump Fun and those other meme token launch pads. That's what centralized exchanges were like. And nowhere to park the profits. Probably there were none for me back then, 2016, 2017. Probably were no profits. And even if there were, I don't think I would have held stable coins. I would have said, oh, this is stupid. Why would I hold stable coins? I'm here to gamble on tokens. But the Genius Act gives us a framework. And I think regulation will be a net positive. It will probably hurt some existing protocols, some existing teams, and some existing tokens. But a lot of the reason why companies and founders kind of avoid the United States is because there was this lack of regulation, but the ability to come after you with the SEC. Okay. And in order to play it safe, Americans were geo blocked from airdrops, were not able to get on certain DeFi platforms, not able to claim certain rewards and the like. So, this hopefully will begin the trend of the US market being open for business for crypto. US The US will be the number one customer of crypto. I have no doubt about that. But let's go through the framework really quick, review some notes. We're going to talk about one stablecoin in particular that I know is exempt from the Genius Act. And there is a classification of stablecoins that will be exempt, at least for now. We'll talk about that. If you're a decentralization maxi, maybe you want to stick around for that. But number one thing is that companies, institutions are allowed to issue stablecoins. However, they must be licensed by federal or state regulators. All right. So it's licensing. That's number one. Number two, the stablecoins need to be backed one to one. Liquid assets, so dollars, right? This is a move to give the dollar some utility, I guess, in crypto terms, if you want to call it that. Companies issuing stable coins will need proof of reserves, and they want liquid assets, and that for me is going to be mainly US dollars. The Genius Act also brings stablecoin issuers under the KYC AML compliance, which is supposed to um, thwart money laundering and terrorism and all that. So you're dealing with, these stable coins, and I'm guessing there are going to be proprietary apps that transact with these stable coins. You're going to need to KYC. I'm 99% sure of that. Um, Smaller issuers of stable coins will actually answer to state regulators, which makes sense. Well, I guess once they get above a certain size, they'll fall under federal regulators. But I like, in general, states taking up some responsibility here. I don't think everything should be regulated at the federal level, especially for smaller issuers. Um, any foreign issuers, they must match the US standards. I guess that means if they plan on issuing it or making it available for use by US citizens, those on US soil. That makes sense. Um, Maybe the most interesting provision here is that stablecoins are not securities, they are not commodities. I guess they're just going to be their own classification, at least for now. Um, and there are various safety standards baked into this, just for stability for issuers and all that. I'm going to bring up a couple. I'm going to bring up a couple of websites, but just want to remind people, if you're watching on X, I don't think I could see your comments through my specific software. And this is the software that I use. I'm not changing my software. Come over to YouTube. You could jump into the comments. I'm happy to bring the comments up onto the screen if there are any. And want to thank C. Edwards for bringing that up. Long time viewer. And as I am a long time audience member of your spaces, your wonderful nocturnal emissions spaces. All right, let me bring up my screen here. We'll go through the series of events like this. This is not a done deal. The Genius Act. It's not a done deal, but it passed the Senate. It got bipartisan approval. There is some opposition, obviously. Nothing's going to pass with full approval. I don't expect it to, not under Trump's watch, but it did pass. And we're going to look at some of the sources. I gave you the TRDL. We'll look at some of the more comprehensive sources and bring up any other issues, implications for Circle, implications for Tether, and all that. So let's go. There we go. I wasn't sure if that was going to work. It worked beautifully. Cameron Winklevoss. Um, this is what winning bigly looks like. The industry obviously happy about this. Regulations are good, especially for those who play by the regulations. And Cameron Winklevoss and his brother are the founders of Gemini Exchange. They recently issued a credit debit card backed by crypto, and they definitely play by the rules. These guys are actually built one of the few exchanges that even New Yorkers can use. So thank you for that. Nice little exchange that I often use. And he's giving David Sachs the credit here. Landmark, stablecoin, legislation, regulatory clarity, enhances consumer protection. That's always what it's about, right? The government is so concerned about consumer protection. And this part I find interesting. Extends US dollar dominance online. So you're getting a stable coin, which is a digital, if it's backed by US dollars, presumably most of these companies, issuers are going to hold mostly US dollars as the one-to-one backing. You're using a digital representation of the US dollar. Now, some would say, oh my God, this is a CBDC. I think this is not a CBDC. This is private issuers are able to issue stablecoins, right? A CBDC would be central bank issued and would be mandatory for people to use. A couple months ago, we had a live stream. We talked about the executive orders that were signed as they pertain to the crypto market, and they specifically stated there will be no CBDC. Hopefully the administration sticks to that. Maybe eventually we'll be using a CBDC, but it looks like it's not in the cards right now. Senator Bill Haggerty, his name is on the bill. He's proud of himself. Our Congress, our House and our Senate, they are very good at not only grandstanding, but patting themselves on the back when they just like do their normal job, right? Like carry out policy that they promised when they got elected. Um, the Genius Act establishes the first ever pro-growth regulatory framework. So what they're saying is prior to this, previous administration, they used regulation punitively. And one of the trends that I see early on in the Trump administration is that they are peeling back some of this punitive action and they want the industry to grow, right? It makes sense. Let it grow. If you tax it when it's bigger, 5-10 years down the road, it's better for the government if you're interested in revenues from that industry versus snuffing it out before it has a chance to proliferate. Also, you don't want, if this is in fact, game-changing technology, you don't want other countries getting the leg up. And if the United States overregulates or regulates poorly, that's exactly what's likely to happen. And another key part here, maybe I breezed over it in the TLDR. With Genius, the value of stablecoins will be pegged to the US dollar and backed. About 99% of stablecoins are pegged to the US dollar. Stablecoins don't have to be pegged to the US dollar. Stable. They just have to be pegged to something else. So we'll we'll talk at the end about actually the shortcomings of being pegged to the US dollar. But by combining the dollar's advantages, he says, with the speed and efficiency of blockchain, the Genius Acts facilitates as TradFi's adoption of crypto. New generation, it's all about payment processing for these issuers, right? They want it cheap, they want it fast, they want it easy, they want it not corruptible. What blockchain will these stable coins be issued on? Man, we'll talk about that. All right. I have my thoughts that won't be popular. I've voiced them before. Would actually like to hear your thoughts. So, again, if you're on Twitter, come to the YouTube chat. I can't see Twitter comments. Yeah. I can't see Twitter to comments, it looks like. So, I'm not going to read this guy's whole tweet. I've linked it down below, but his name is on the bill. Let's look at CNBC has a pretty good write up, right? And really just elaborating on what I already told you. The Genius Act establishes the first federal framework for dollar peg stables. The theme here is dollar pegged. Keep that in mind. But also authority for the Department of Treasury, um, I guess, to oversee, regulate, and tweak this legislation, right? Uh, Banks, fintechs, and retailers. I've seen, Walmart even looking to issue their own stablecoin. That's interesting, using the Walmart stablecoin. It's almost like having the credit card, right? What are you going to give me back as a customer? I get 1% back. Like, that's not bad. It's probably cheaper for them to do it via their own stablecoin versus a physical credit card. I don't know. And also, I don't know if Walmart even has a credit card, but that's typically how um, retailers try to get you to be loyal, right? Credit card, discount card, some type of membership. It could all be done with through their stable coins, right? Maybe you'll be identified as an NFT, like I said 3 years ago, 4 years ago, and that never happened. Right. Another bad prediction by me. Yeah, here we go. Industry giants like Amazon and Walmart are moving toward these offerings as payment networks brace for disruption. Payment networks are basically obsolete once stablecoins and blockchain become the norm for payment processing. I breezed over this. We will look at Democrats' rebuttal here. Um, Democrats failed to secure a provision barring the president from profiting. I mean, the president, while he's in office, is not making money off of this. I don't see the problem here. Congress is in office, right? So there are some provisions preventing Congress from doing certain things. But I mean, I think that you can't avoid conflict of interest. I understand you want to try the best you can to not have conflict of interest. I don't think it's possible when you have Congress sitting in the chamber trading stocks on their phone. Like, does it even get much worse than that? I don't know. But yeah, milestone for the crypto industry. This is like really a landslide as far as I'm concerned. Basically 70-30 in favor of the bill. It's bipartisan. It's not really a surprise, right? Because the financial industry were the number one donors to the Trump administration as far as sectors go. And it was a landslide victory by all reasonable measures. This is not a surprise, right? Because Trump collected a lot of money from the financial institutions, financial sector. I'm sure tons of Congress on both sides as well. Um, the Genius Act will protect consumers, enable responsible innovation, and safeguard dominance of the US dollar. Interesting that they are phrasing it in this way. And this is New York's senator. She sponsored the bill. Not a surprise. Wall Street is here. All the big banks are here in New York. She needs to play ball. Otherwise, she would not have her job, right? No one's going to become a senator in New York if you're anti Wall Street. So, not a surprise. But again, it's bipartisan. And I was going to say, what is the Genius Act even short for? Tell me in the chat. But it says guiding and establishing national innovation for U.S. stable coins. All right. I think with AI, we'll probably get like really cool acronyms for these bills, even better than this one. All right. And what I find interesting is now Circle and Tether were basically the options for centralized issuers. Now the door is open for a broader range of issuers. You've heard Walmart. I'm sure every bank's going to have its own stablecoin, um, and they'll be integrated somehow into existing payment systems. Although I'm guessing eventually the settlement will happen on blockchain. And we'll talk about where the stablecoin liquidity will live, like I said, at the end. Um, Sweeping authority to Treasury Secretary Scott Bessent. I got to say, I've seen this guy talk a bunch of times. He might be the most reasonable, calm, collected, intelligent person that's ever been appointed to any position in the government. My God. Like this guy should be the VP in 2028. I'm sure he's doesn't care if it's a Democrat or Republican. These are finance guys. They're not, green is the color that matters. It's not, blue versus red. This guy should be looking at VP in 2028, president in 2032. The way the trajectory is going for Scott Bessent. My God, you can't ask for someone more, present, let's say, more prepared for his job than this guy. And they're expecting explosive growth out of stable coins. And now here's the key: heads to the House. It has its own version of a stablecoin bill dubbed stable, not as cool as Genius, obviously, so it's not going to pass, but they need to pass the Genius Act or try to get some key components of stable into Genius. Already don't like stable. I like this better. What was it? Guiding. I call it guiding. Guiding and establishing national innovation. Should say guiding and enforcing innovation, right? Because now the government's a player. Government's a player. Nothing's going to go down without the Treasury Department. Something I didn't mention in the beginning, both versions of the bill, they prohibit yield-bearing consumer stablecoins. I don't know what that's going to look like. Does that mean you can't earn on stablecoins? Or does it mean the yield has to come from somewhere other than Treasury yield? I don't know. But these big institutions are now incentivized to hold US dollars, issue a stablecoin in its place. They're going to earn. I don't know how it's going to look. But if retailers are allowed to issue stables, they're going to be earning because they're going to have to hold US dollars as the backing. Yeah. Again, we said this already. Oversight is the Treasury. It's the department that's the centralized department that's going to oversee all of this. The House's version splits authority between the Federal Reserve. What? No, no, thank you. No, thanks. But maybe that will be added to the bill. Who knows? I don't think that will fly with the current administration, but we'll see. Here we have Cynthia Loomis, who's been pro crypto for years. She's shocked that it was so hard to pass. I'm not shocked. The government has been on vacation most of the time since January. They don't do much. They make TikToks and YouTube shorts. They don't do anything really. I'm surprised this even got done so fast. If you remember, the executive orders that were signed gave like a 180-day window to get things like this passed. So she was at the Bitcoin conference. See, she wasn't working. They don't work. Congress got to be the best job. It's better than being on disability with like sanitation or fire department or whatever. It's so much better. You get paid double and you work even less than people on disability. Fact sheet, which I'll share in the YouTube description here. They're saying it enhances national security by registering stablecoin issuers. They're probably referring to AML, right? Money laundering, terrorism, moving money around without KYC. And this will help with sanctions compliance programs, as it says here. And that's what the Banking, Housing, and Urban Affairs is interested in, it looks like. But of course, there's not everyone's happy. You could watch this Elizabeth Warren speech if you want to, but this is the quote that all you need to know here. I think Elizabeth Warren is the kind of person that goes to the supermarket for like $20 worth of stuff and sits there and writes a check and holds up her driver's license like, "Oh, you forgot to check my ID." And then there's a line of people waiting with their Apple Pay behind her. But anyway, Elizabeth Warren says, "I rise today to talk about the Genius Act and the threat it poses to our financial system, our national security, and our democracy." I don't know what she's talking about. The threat to the financial system. She's, hook, line, and sinker a shill for for the CBDC wing of the government, obviously. But yeah, if you want to read this big long thing, I'll put it there. But does it really matter what the opposition thinks when something like this passes? Probably not. And then Cynthia Loomis, she's happy. Like I said, Congress, they grandstand, they make TikToks, they trade stocks, they pat themselves on the back. Congress really doesn't do much else other than that. Oh, they take bribes. They take bribes. All right. So I went through it. I don't want to talk the whole time about stablecoins. I want to talk about the types of stablecoins that are out there. Um, and I've basically boiled it down to three categories of stablecoins. Three categories. Is that enough? It's plenty, right? But centralized stablecoins, this would be, USDC from Circle, Tether, USDT, centralized stablecoins that are backed by reserves, controlled by a central entity. In Circle's case, there that's a publicly traded company. Tether might be in trouble because for as long as I could remember, Tether's reserves have been questioned by like everyone. Yes, it's the most successful stablecoin, clearly, but everyone's always questioning, do they have the reserves? Do they have the reserves? Well, now, because of the Genius Act, the Treasury Department's going to be enforcing this. We'll see if Tether actually has the reserves finally, if this is just FUD and Tether's totally fine. But Tether might might be under some scrutiny, let's say, if they're not able to comply. Um, so those are centralized stable coins, right? Company issues them and they're backed with something acceptable. Now that the Genius Act is about to pass, that's probably going to be US dollars, liquid assets. Um, Decentralized stable coins. These are, governed by some kind of DAO, and then they're stabilized by their protocols. Sometimes they're over collateralized, as is the case with DAI. Although DAI has a new name, I forget what it's called now, right? MakerDAO, DAI, they've rebranded. MakerDAO is now Sky, and DAI is something else. Is it SUSD? Something like that? SUSD? Something like that. But yeah, they've undergone a rebrand. As far as decentralized stablecoins go, DAI has been really successful, been around as long as I can remember. And there are others. There are others, but not to be confused, right? Decentralized stablecoins are not to be confused with algorithmic stablecoins. These are stablecoins that have some type of supply demand adjustment that keeps its peg. There is no collateral. It's computerized, right? It's algorithmic or algo stablecoin. The price is just created by the algorithm. They're wonderful, but they fail. And Terra USD or UST is the example. That was basically the the knockout blow for last cycle where Terra depegged and there was no reasonable way to repeg the stablecoin. Although I heard the Luna community is still trying to repeg that token. Is that true? Can someone confirm that? These people sick? Like, are you sick? You're not ever repegging that stable coin. Lunk, that's what they called it. Lunk became junk at some point, and you cannot reap UST because you have no collateral. The token is just burned and minted on a whim. So those are the three. You got centralized stablecoins like Circle and Tether. You got decentralized stablecoins. These are the DeFi stablecoins like DAI, right? MakerDAO, which is now Sky. And then you got the algo coins, Um, the decentralization maxis will probably still prefer DAI. We know that Circle, because they are issued by a central authority, they could freeze wallets and all that. Um, the bill doesn't really make a distinction between centralized, decentralized, but they definitely say, hey, algo stablecoins under the Genius Act, no good. You might be aiming for a one-to-one peg, but without one-to-one backing of a liquid asset, meaning it can't be your own crypto that you issue, there will be no algo stablecoins, right? Maybe foreign issued, not available to United States citizens. That's fine. But the Department of Treasury is saying no. All right, fair enough. Fair enough. Fair enough. Um, uh, what else? What else? Let's talk about another stable coin. Let's talk about what do we got going on with this here? Let me make sure my connection is good. I don't think my connection is good. Yep, I'm on a delay of like 3 seconds, it looks like. Let's get the internet going here. Um, let's talk about Silk. Silk is a decentralized stablecoin, but it is not pegged to the dollar. So it is exempt from the Genius Act. Let's switch over. But yeah, Silk, it's a private stablecoin. It is exempt from the Genius Act for the reason of it not being pegged to the dollar. It's pegged to a basket of currencies. It's decentralized. It is private when used on the secret network, and it is inflation resistant since it is not pegged to the US dollar. So, one of the downfalls of being pegged to fiat currency is you're subject to the loss of buying power of that fiat currency. That's not good, right? That's inflation. When your currency is debased, any stable coin that is pegged to it also will be debased, right? Let me go to the there we go. And this is Shade. This is the issuer, the DAO that issues Silk. And here's the Silk page. So there we go. Mm. I think I'm coming in and out of reception here. Don't know why. There we go. Should be better. Internet should be catching up. Ugh. It's got to be a better way to do this, right? But anyway, Silk stablecoin, Silk stablecoin can be minted, right? It can be minted, and you put up collateral, you mint the stablecoin. So it's decentralized, it's collateralized, and the collateral is a basket. You could even use other stablecoins to mint Silk. There will be a Silk app where you could easily buy it. Um, you could buy from it's minted on the secret network, which not many people know. That's part of Cosmos. Again, not many people know it, but it'll be accessible through other ecosystems like Ethereum and Base and all that. You'll be able to earn with your Silk. And again, because Silk is exempt from the Genius Act, I guess they'll get away with giving yield and it'll be no problem. Um, Curious if I'm having technical issues here, if it's just me. Let's get back on the Silk. What else? What else? What else? Yeah, over a dozen different assets can be used to mint Silk. That becomes the collateral. Wrapped ETH, wrapped BTC, USDC, some of the blue chip assets in the Cosmos ecosystem like Atom and Osmo and the like. Um, can be used for payments, can be used for lending, staking, or just store of value. And I'm going to show you what I mean by store of value. So where where's the analytics page? We'll go to Silk. We'll go to Silk. So since Silk is not pegged to the US dollar. And by the way, if you're in the chat, let me know if I'm coming through okay, because on my screen it's showing a delay. It's really annoying. Could just be my screen. But anyway, if you held Silk, um, since it since the beginning of the protocol, and the market cap is only like $2 million worth of Silk out there. So if you're watching this, you're likely hearing about it for the first time. Well, is this not going either? Let's see. Internet fail. I'm gonna reload. Can I reload on a live stream? Let's see. We're gonna find out. We're gonna find out. Slow reload. Something's going on my internet. It only messes up when I do live streams. Imagine that. Imagine that. There we go. And I want the yearly chart for Silk because I want to show you that Silk is a stable coin. It's actually gone up in value over the last 2 years. It's gone up in value while other stable coins have stayed at a dollar peg. And that's great that it stayed to a dollar peg, but Silk is not pegged to a dollar. Silk is pegged to a basket of currencies, which we'll look at. And it's worth $1.37 now. When Silk launched, it was worth, around a dollar. It launched at a dollar, okay, per Silk. I don't know what's going on. Do I need to do my wallet? There we go. I had to do my wallet, I guess. All right. So here's the chart for Silk. This is month by month, and you could see going back only 2 months, it was $1.27. Now it's $1.36, like up 5%. Most of you are down if you're holding altcoins, especially. Most of you are down if you're holding NFTs. You're way down if you're holding inscriptions and ordinals and whatnot. So a true store of value should be inflation resistant, and that's exactly what Silk is. As the US dollar lost its buying power, Silk gained buying power because, let's make this big, it's pegged to this basket of currencies. Bitcoin, because of Bitcoin's performance against the dollar, Silk became slightly more valuable, right? And gold as well, right? Gold is about 24% of the basket, Bitcoin about 18%. So, like, almost half of the basket are those two assets, which we know have been performing well against the dollar. And it's because of the inflation the last 4 or 5 years, right? Inflation doesn't mean prices go up. Inflation means the dollar becomes weaker, so it buys less stuff. And then you can look at the collateral composition. Most of it is liquid staked Atom, ST Atom. Okay. Then a bunch of ETH things here. Oh no, this is the LTV. This is not the percent composition, is it? Interesting. So we got 38% Atom, 17% and 13% these ETH derivatives. We've got staked secret. We've got wrap Bitcoin, another ETH. And so it's a basket of collateral pegged to a basket of currencies. And I feel like the Silk team should be proud of themselves because it's appreciated like 20% in a year, acting as this inflation hedge, a store of value. I would almost not even call it a stable coin, but it is a stable coin. It's just not stable against the dollar. It's stable against assets that have actually performed better than the dollar, which means, let's say the dollar actually gets stronger and then these get weaker against the dollar. Chart's not going to look like this. It's going to have some reversion back to, this price, let's say, or even lower. Let's see. Yeah, it was $1.14 last year. So what is that? Up more than 10% in a year. More, yeah, 15% in a year, something like that. So Shade Protocol, they sponsor my channel. The fact that we're talking about the The Genius Act is totally relevant. Silk is their stablecoin, but exempt from the Genius Act, at least for now, and serving as a store of value, whereas USDC, Tether have not been a store of value. They've been a store of value against altcoins, maybe against meme tokens, against NFTs, but they're subject to the same um, downfall, which is inflation, loss of buying power as the dollar, because those stables are pegged to the dollar. Hopefully that makes sense. I've said it four different ways. Whatever the best way is, that's what I meant. All right. I'm going to use the last few minutes here to talk about Astrovault, and I don't have a graphic ready. It's the end of the stream. Why not? So AXV, Astrovault, and Astrovault is not a sponsor of my channel, but I have a stake in Astrovault. Let's get rid of this. Um, let's put this here. So I'm going to clip this part out. I'll put it on my Omniflix. Um, is Astrovault in trouble? Well, it's not doing so great. It Their revenue model was based off of some tokens that have not maintained their value even in the bull market. And I did buy AXV today. I still think it's undervalued. If you can get a DEX token for a DEX that actually has revenue for under a million FDV, I think you should look at it. I was actually able to ARB the DEX because some of the pools were off and the swaps rates were off. I was able to get 10% more than what I actually intended to buy because the way the routes worked and all that. So Astrovault for you, for you, um, for you. I mean the community. We should start selling some of the tokens in our treasury, our protocol owned liquidity that all of us can agree is not good to hold long term. One of those being Arch. So because the market cap of Astrovault is so low, small changes to the treasury will probably have a profound impact on the token performance. Token performance is what gets people's attention. People see the token going up while everything else around it going down. And maybe that will get some more people involved in Astrovault, maybe some more value add community members, maybe some investors. And starting with Arch, I say we unbond all of it. Anything that needs to be unbonded, and we do some type of stream swap and we swap it back into AXV. That's number one. Any liquid Arch that we have for whatever reason, if it's in liquidity pools, pull the liquidity from the protocol own liquidity. Pull it, sell it, set up a stream, right? Stream, X amount per hour, X amount per day. Convert that maybe first into stablecoin and then into AXV. Buy back AXV, burn it. That's my proposal. And that it doesn't have to be any more difficult than that. Archway is a terrible place to have an application, and it is a terrible token to hold in a treasury. I guarantee you none of the founders of Astrovault is holding Arch on their ledger right now, hoping for the best. We just watched some weird dynamic flow through Astrovault where Jackal went up about 15 to 20%. AXV went down 30, 40%. Someone swapping Astrovault into Jackal, probably. Then there was a whole bunch of activity on a centralized exchange involving the Arch token, as the Arch token took a huge hit, 30% down in the last month. Bitcoin's only down 3% in the last month. So those who hold Archway, I'm not saying it's the Archway team or Phi Labs. I could care less what you guys are doing. All you're doing is paying yourself salary to do nothing. Someone with a lot of Arch is selling it. We don't need to be holding that asset. We should have sold this a year ago. And like I said, we should be swapping it into AXV, burning it, adding a deflationary mechanic, which is what the original plan was, right? Offset inflation, turn on deflation. Speaking of inflation, I don't think we really need inflation other than to maybe 2 or 3 pools that we deem important that's making us money as a DAO. I would lower inflation by turning it off to specific pools, not just blanket cutting the rate, the emissions rate. That's number 2. Number 3, we should look hard at Osmo and Atom and follow suit if what we do with the R token um, achieves its goal, let's say. Start swapping it into AXV and burning it. And that's that. I would shut down farms. There's no reason to use AXV to farm Atom and Osmo. I would just swap it into AXV. I would set it up over like a 60-day or 90-day period. Here's our deflation mechanism, guys. And why aren't other dexes doing this? I understand once we run out of those tokens, we can't do it anymore, but they'll be off our books, right? We got hammered holding these tokens as a dex. And those 3 tokens that I named represent about $40,000. It's like 10% of the market cap. It's significant, but in terms of the protocol owned liquidity, it's not significant. Let's get rid of it. If AXV goes up in price because of new buyers, new believers, new LPers, as they see this deflationary mechanism um, work, the TVL is going to go back up anyway. So that's my plea for Astrovault. Hopefully, you can get some support. I did buy more today. I don't think I've ever sold AXV, but yeah, let's save this Dex. The Dex is not doing great, and it's a victim of circumstance. But also, we could have managed Treasury and protocol owned liquidity a lot better. All right, that's all I'll say. Um, and I think that's it for the stream. I don't really have anything else. Virtuals, not going to talk about virtuals today. Maybe we'll talk about virtuals next week. I'll be on vacation the week after. There'll be no stream, there'll be no tweets that week. Can you handle that? Can you handle no tweets? But yeah, we went through the stablecoin bill, the Genius Act, right? What's in the bill? What is the regulatory framework? Who's affected? Who's not? Who's going to enforce this? Right? We went through that. We went through different types of stablecoins. You have centrally issued, collateralized stablecoins. You have decentralized stablecoins, also collateralized, usually over collateralized, and then you've got algo stablecoins. So algo stablecoins are basically banned, from what I can tell, from the Genius Act. That's fine by me. Everyone that was in crypto 4 years ago still limping from Terra UST. Okay. And now decentralized stablecoins will probably be incentivized to be more creative, like Silk has been, by being pegged to a basket of currencies, not just the US dollar. Therefore, they are actually exempt from this Genius Act for now. That's all I got. Have a good one.